Hi, this is Don Durrett, Gold Stock Data. Um, I wanted to create a little video on how to manage your risk. So I created this um, this pyramid of risk. So the bottom is the base, and so the wider the pyramid, you want to have higher allocation. So as you go up the pyramid, it has higher risk, and you want to have lower allocation. So my highest allocation is physical silver. I have 7%. And then bullion ETFs, I have two of those, which is, I think about 3 to 4%. Then I have gold mutual funds. I have three of those. And that's, about 10%, I think. Maybe not 10, 8. Yeah, it's not that, 7 or 8. And then minor ETFs, I have, I think, three ETFs, which is another, I don't know, 5% or so. So this bottom, I have about 25% in this foundation. These are what I call kind of my lower risk foundation, which I think is important to diversify risk if you're going to buy a lot of high risk stocks. So these can have anywhere from 2 to 10% each one. I mean, each ETF you could have, or each, mutual fund or whatever. You can have higher percentages in these. So the next rung is my majors and my mid tiers. And these, I want to have, these are really about 1% each, but not all of them. A lot of them are 0.5. So it's 0.5 to 1% of your total cost basis. And I might have a couple above 1%, 1.5. I don't like to put 2%. Once I'm in individual stocks, I do not like to have 2% in an individual stock. In my entire portfolio, I might have maybe three stocks that are over 1%, something like that. But my initial buy will never be more than 1%. And then it might grow. They might acquire somebody, and it ends up growing. Like Hecla, started 1% with Hecla. My cost basis, but they kept acquiring companies. So now my cost basis on Hecla is about 1.5%. So 1.5%, my cost basis is about as high as I go in a stock. So in these mid tiers, it's like 0.5 to 1.5. And then the next rung up is, so you basically, my pyramid, it would be higher. This line right here. The reason why this box is so big is because I had to type all three of these things in. But this box right here would actually move up to about right here. So I would have on my mid tiers, my majors, my foundation, it would be 60%. And so this looks like it's less than that. And options are like the very tippy top. If I wanted, I needed enough room to type this stuff in. But actually, options are like the very tip of this thing. Like right now, I do have an option in FAS, and it's tiny. It's my whole portfolio. It's not even it's about 0.5% of my total portfolio. So 99.5 is the rest of it. So 0.5 of the total, less than 1% of the entire portfolio is the option. Leverage ETFs, some people like to do those as well. I don't. I'll do leverage ETFs only in tandem with an option. Okay, so this is the big box right here. This is the one that we need to kind of go over real quickly here. So I have juniors broken into three buckets. You have the producers, and this can be an emerging mid-tier as well. But usually the producers are either emerging or they're small producers. So I'm not going to have a lot of money in small producers. The risk reward isn't there. So this is going to be a kind of a real small bucket. But then, so you got these two buckets here. And I like to have on developers, I own a lot of developers. The combined, these two right here combined, I have about 25%, which is a lot of risk. Explorers, I like to have 0.25 to 0.5 allocation. And then explorers are usually mostly 0.25 and maybe some of them even less than that. Some maybe 0.3, but very few explorers are over 0.3. So I small allocation explorers. These are basically drill stories, and then developers. I rarely would go over 0.5%. Pretty rare, maybe one or two stocks would get more than 0.5, but most of my developers are 0.3 to 0.5. 0.3 would be kind of more normal. I just like to. Sometimes I call myself a stock collector. I think about 160 positions right now, so that's why I have all these small positions in these two areas right here. And these are kind of my, these are the stocks that I'm really trying to go after in my 10 baggers. And then also in the mid-tier producers, if I can get in with a good entry price, these can be 10 baggers as well. But I'm trying to find 5 to 10 baggers. So that's my strategy on managing risk. Stop my screen share and stop my